So good morning, everyone. Welcome to the last day of Financial Inclusion Week 2020. As you know, the theme for today is COVID-19 and consumer protection. And particularly here, we are going to talk about COVID-19 and emerging consumer protection risks. The recent World Bank report shows that COVID-19 is likely to push between 88 and 115 million people into extreme poverty, reversing the poverty reduction trend of recent decades. It has also been reported that 340 cash transfer programs across 158 countries were initiated in response to COVID-19. Of those, 65 programs in 43 countries are new initiatives, which are introducing benefits to 1.1 billion first-time cash transfer recipients. And to meet the demands of these programs, scale and urgency, rapid digitization of cash transfer payments is taking place around the world. The COVID-19 has really steered the countries to shift to rapid digitization of cash transfer systems, and there has been emerging consumer protection issues that we have all been hearing about. So, during the course of Financial Inclusion Week, we asked participants to take a survey and share what they have been seeing and hearing with regard to emerging consumer protection risks in light of COVID-19. And the survey findings and results are that generally most respondents believed that rapid digitization of cash transfers presents increased risks for customers. Secondly, the fraud by staff or agent was the most commonly cited type of risk observed, followed by excessive fees and poor data protection and security. Thirdly, respondents would like to see better mechanisms for supervisors to monitor misconduct and more consumer awareness and capability trainings by providers. Also, in general, the respondents look forward for the following actions from, say, the different stakeholders, and these stakeholders were clubbed into three buckets. From the policymakers, regulators, and supervisors, the expectation is that there needs to be a mechanism to monitor misconduct like aggressive cross-selling, abuses, excessive charges, scams, and many other points. Secondly, they require FSPs that are delivering cash transfers to put in place the customer recourse mechanisms. Secondly, in terms of the action from providers, the two pointers that was found and which was commented on mostly was that the more consumer awareness and capability alongside digital transfers is very much needed. And also there needs to be an effort from a provider to put in place customer recourse mechanism. Thirdly, in terms of support organizations, and in support organizations, we really meant think tanks, advocacy organizations, and researchers. The action that we are looking forward to is a research and consumer protection supervision and ways to address risk by regulators and supervisors, and capacity building with regulators and supervision on emerging risks and potential solutions. So with these findings, we have a privilege of two esteemed guests with us who would discuss on the types of risks emerging and potential responses by providers, regulators, and supervisors. Without much further ado, I would like to request Paul Tregidgo, our Chair of Advisory Council, to please introduce himself, and our guest expert, Denise Diaz. Over to you, Paul.
Tanwi, thank you very much, and good morning to all of you from New York in my case. Delighted to speak to you, and thank you, Tanwi, and for reviewing all the results that have come in during the week. It's been a very busy and packed week. I'm sure many of you who I can see have joined this call, have participated in the events, and we're delighted to be able to bring on this, the last day, a focus to digitization, cash transfers, and consumer protection. To help us do that, Delighted to welcome here Denise Diaz. She is an independent consultant with over 18 years of experience, having worked in more than 25 countries. Denise advises and trains financial sector authorities in emerging markets on regulation and supervision, with a focus on fintech, innovation, inclusion, consumer protection, and SupTech. Denise also engages with CGAP to explore frontier regulatory and supervisory issues in financial inclusion. And prior to becoming a consultant, she worked at the Central Bank of Brazil in prudential supervision and consumer protection supervision, and the regulation of banks and non-banks. So quite a portfolio and experience that could not be better placed. And we're delighted to welcome her today to comment not only on the survey, but offer her observations more generally on an issue which is front and center and is going to remain so for the foreseeable future, either fortunately or unfortunately, but very topical. So let me begin by Denise, by asking you straight away, having had the opportunity to take a look at some of the survey results since they concluded last night. Surprises for you there? Anything jump out at you in the context of your experience that you did not expect to see?
Thank you, Paul, and good morning, good evening, and good afternoon to everybody. Thanks for the nice introduction. I would say that, yeah, maybe not on the risks. I think I wouldn't be surprised by the risks that people highlighted, but for example, frauds at staff and agents. I think these have been already seen, observed in many countries as one of the most immediate risks that beneficiaries face when they are trying to withdraw their cash. For example, they might be asked by the agent to pay something, an extra something, or to make a purchase, and transparency of the fees. Also, the issue of effective recourse, I'm not surprised with that. It's essential or fundamental for D2P programs, for any kind of financial sector provision. It's fundamental that providers have effective recourse, but also in this case, it's effective recourse set up by the programs themselves to not to only receive complaints about the program, but queries about the programs, including on things that have nothing to do with financial sector, such as eligibility. And the data risks that people highlighted, I agree with those. I see data both on the risk side, but also opportunities. We can talk more about that. Of course, there is always the risk when you onboard people into digital data ecosystems, that there is a risk of providers sharing the data with third parties for non-legitimate purposes, or even with other government authorities. And in some countries, this is a problem, a fear of government surveillance. But I think I missed a major thing that, in my view, it's one of the major risks of digitization of P payments, is the risk of exclusion. Why do I say that? When digitization is specifically done to improve the efficiency and the effectiveness of these P programs, there is a risk of exclusion. There is a risk of deepening the digital divide that exists today. And when digitization is very rapid, as it has been during the pandemic, there is a risk of authorities giving too little attention to the beneficiaries who are not connected into the digital infrastructure. So I think this is one of the most important concerns. And it's even a concern in rich countries. It's not related to to D2P payments, but I know at least in the UK, the FCA has been ramping up its monitoring of access to cash during the pandemic, because many bank branches have closed down. So they are putting together a lot of databases and a lot of information about and merging with the information about bank branches to identify specifically vulnerable segments of the society that may be having limited access to cash. So if that's a problem, if access to cash is a problem in rich countries, I can only imagine that the digital divide also exists in other countries. So I would be very worried about that. But another issue that I'd like to highlight, and I'm not surprised that it's not in the results, but I would emphasize this, and if we continue talking about these issues, I would emphasize even more and many more times, is the issue of choice. So giving recipients a choice. It might not be able, this might not be an option during the pandemic, since the measures have been taken in a very rapid manner, and there was the legitimate concern with the speed of opening accounts and delivering the payments, but not in every case the customers had a choice. And I completely support that these efforts were very fast, and many countries were able to open accounts in bulks and with specific providers. So the customers didn't have a choice, but they got their money. But now it's time already to think about choice. What happens after the pandemic is gone? What happens after these payments have been withdrawn by the people? So I think the choice is very important. And there are cases, for example, where providers, like in Peru, where providers were allowed by the regulator to open accounts without customer consent or customer even knowledge that they have these accounts being opened by them. So I think in those cases, we really need a special look at those accounts as a consumer protection issue. So to make sure that the choice element is added later on in the process, but not too late. And last, I was very happy to see the people calling for better mechanisms for supervisors to monitor misconduct. In that sense, I would first emphasize that financial consumer protection supervisors are not the superheroes. So they're not alone. They should not be alone in this process. So the digitization should not be seen as from the program side as, okay, we're done here. So now it's the role of the financial sector supervisor. But I think it must be a coordinated, collaborative efforts across the authorities. And that might even include non-financial sector authorities, such as the telecommunications authorities, because some of the risks that the most vulnerable segments of these beneficiaries will be facing, such as patchy network and disconnected when they are doing a transaction, those risks could actually be addressed by the telecommunications authorities rather than the financial sector authorities. So this need for collaboration and coordination of authorities is very important. So I think these are the initial observations that I will have with the results.
Denise, thank you very much. And I just picked three, I wrote down 3 words from your response. Digitize, the exercise around from the survey. So exclusion, choice, and mechanisms. And for them to surface out of the survey, I think gives us a platform from which to expand future researches and future best practices. And in the context of digitization, which it is lauded for shining lights of transparency on both the good and the bad in ways that legacy processes cannot and do not. If we start with those 3 takeaways, exclusion, choice, and mechanism, we're already on the way to addressing a number of the issues that, as you say, are going to live with us for a long, long time. Turning away from the survey, can I ask you around your own experience? Are you seeing, if you're comfortable with this, any particular program that has got it right, any particular deployments that have really been effectively paired with what I would call financial capability and awareness? What are the best in class that you've seen so far?
It's tough to get the best in class, no, because I think there are good examples, good initiatives across countries, and there are bad ones, and they are usually actually merged into the same country. I would mention one country, not because I am saying it's the best in class, but it's impossible to talk about this D2P digitization effort in the world today without talking about India. Everybody's talking about India, but not because everything is perfect in India, but because just the sheer size of the country and the number of the people who are receiving D2P payments today in a digital means, it really shows the potential of doing this in other countries where the challenges are smaller. So I would say that India really showed during this pandemic the importance of getting the infrastructure right. That's the main lesson from India today, get your infrastructure in place. Now, in the topic of awareness and capability, so I would say that many countries are trying their best in communicating effectively with the beneficiaries on the change in the payments or the initial of the payments, because many of these beneficiaries are new to G2P payments. But I haven't seen a lot on the capability side in terms of what's next after this first effort of paying these transfers to the beneficiary is done. What's next? What is the capability effort there to try to make people understand how to use this account? So I haven't seen much of that. And even on the communication side, when we think about the massive efforts of making people aware of how to withdraw the funds, we still have a high percentage of women in India, for example, and in other countries too, that haven't withdrawn their funds from the accounts. So the payments is successful, but people are still lacking something, and it might be related to awareness.
Well, picking up on that, Denise, maybe we can ask you in this forum to make some recommendations based on your experience and what you've seen from the survey. If you were going to look at the key protections for consumers that as we look to the future, that we'll need to embed in the concept of digital cash transfers.
I would, again, start with choice.
Mm-hmm.
I think it's fundamental. If you and I have choice, why not the most vulnerable, the poorest people? So even if in the beginning you need to limit the choices, let's try to find ways to give choices to the beneficiaries after the first effort. So I think that's fundamental. And when the choice is not given in the beginning, for example, I mentioned the case of Peru. These are very similar situations to salary accounts. So in many countries, employees have salary accounts. They didn't choose the bank, or they didn't choose the provider, the employer chose. So in many countries, the regulation makes those accounts free and makes a bulk transfer from those accounts to another account of choice of the customer free. I think there is a very strong case for D2P transaction accounts that have been open for D2P purposes to be free. I would actually personally support that if I was advising a country, even with all the complications that provides to the providers. But also choice is about competition. So in the design of a program, I would think about choice at the personal level, but also choice as the system. So it's a competition and institutional diversity. You can't have, for example, an initial effort or effort during a pandemic like this to simply lock in customers to a certain provider. And that's very likely that's going to happen with dominant providers. So, for example, the measures that reduced or waived transaction fees for a while for mobile money in sub-Saharan Africa. Let's imagine a world where this is extended over time, and then the dominant providers they end up killing the smaller ones. So in the end, the customers have fewer choices. So it's more dominance and less competition, less institutional diversity. And again, redress mechanisms, as people have highlighted in the survey, they are very important. But here I would say it's not only up to the providers to have effective redress mechanisms. There must be an independent redress mechanisms for the financial sector, and also redress mechanisms for the program itself. to deal with issues that are beyond the financial sector. And two more points I would say. It's impossible to think about long-term benefits of digitization of G2P payments if you do not look at it in the whole context of digitization journey of a country. So you do need other efforts, such as like India has implemented the India Stack, which was very important to deal with this pandemic. It's very important for countries not to do digitization of G2P in isolation, because digital transaction accounts for people wouldn't have any value if they're not able to use those accounts afterwards. And last but not least, we really need to step up supervision. So financial consumer protection supervision is still in early stages of how to do it. And I think this is a very, very important area to support the digitization of not only G2P payments, but digitization in general in our financial sector.
So this time I wrote down 4 words. Choice again, mechanics again, digitization context, and soup tech. Our next topic was going to be, and is going to be, about the biggest unanswered questions. And if you were going, and I think about your comments on choice and the real challenges to address the choices. Who is defining those choices? How are they defined? To what extent are they imposed? To what extent are they surfaced? Highly complex questions. As you think about areas in which you would focus global efforts next, where would you go first?
I have a personal bias because I've been a supervisor, so I'm very interested in the consumer protection role of the financial sector supervisor. So I'll be very interested in exploring a little further the use of the same digital devices and the data that is being produced to the benefit of the consumers. And that means a little bit more intrusive type of financial supervision. For example, if you have the data to give you information about the behavior of borrowers who are getting digital loans very quickly and very easy, and to realize that if you impose on the provider to just do a little warning in the right moment, right before the potential borrower is accepting the loan, just a warning saying, are you sure you want this loan? Do you need this loan or whatever? Just like Windows warns us of, are you sure you want to close this? Are you sure you want? It's interesting to explore these types of supervisory actions, which are not very common today. So I'll be more interested in that, and the role of the supervisor to actually ensure that the use of artificial intelligence and machine learning is actually not to damage the consumers, but also to ensure that they are protected and their interests are actually protected.
I want to come back in a second if we give the audience a chance to put any further questions up there. So I do want to dig a little deeper into the concept of how you enable choice at the most fundamental level. But let me ask you to conclude the formal Q&A part here. Silver linings. Do you look at what the reactions of the response, either by necessity or by design, to COVID-19 and digital cash transfers? Do you see either reasons for optimism or reasons to be optimistic about the path forward? Take us out on a happy note, Denise.
Yeah. You know, I'm not a usual suspecting to be optimistic about anything, but because I think I'm naturally a financial supervisor, but I am actually optimistic about digitization and the use of data. I think silver linings from this pandemic is really the realization by policymakers all around the globe of the need to put the infrastructure in place. Without it, you can't deal with emergencies, you can't deal with crises, and you can't really advance digital financial inclusion. Secondly, I think and I hope that there will be a more reasonable approach to customer due diligence. So many countries have relaxed their customer due diligence rules for the pandemics, for the customer onboarding. But I really hope that it's leading to something more reasonable. And last is the question of supervision again. I think from this pandemic, because of the increases in risks in digital finance, not necessarily related to DGP, financial consumer protection supervision and the use of technology and data, a data-driven supervision, the importance of having that, of building the infrastructure and the foundations for that kind of supervision, I think now it's more recognized as an important step for countries to take.
Very clear. I'm going to ask you, I picked up very early in Tanwi's report on the survey, one specific, if I may, and perhaps we'll close out on this, and it's around fraud and aggressive cross-selling. I think that was highlighted in the survey responses. Obviously, an ongoing issue which digitization has the capacity to magnify at will in the wrong hands. Can you spend a minute perhaps to conclude here on the specifics that we should be thinking about of the way that digitization can be used to reduce risks of fraud, aggressive cross-selling, and so forth?
So on the fraud side, there are a range of RegTech, regulatory technology applications out there that offer financial institutions better tools to monitor the transactions, to identify frauds. You can tell me, okay, but who is committing the fraud? It might be actually inside the company, so it's not that the company is a victim of frauds all the time. Yes, I agree with that. Some frauds will be intentional by staff, and that's a different type, but technology can still help institutions to identify instances of fraud. On the supervisor side, it's again about technology, so and about the use of data and more detailed data, more granular data about what's happening in the sector. And to do that and to understand more data and more sources of data, you do need technology also. So I would say RegTech, SupTech, the two allied. But one thing that we don't talk much about, and it's not related to technology, but the issue was raised a little bit more after the global financial crisis, is the issue of incentives. Incentives for behaviors. And I'm specifically talking about incentives for behaviors at the financial institutions. And some authorities after the financial crisis started regulating the compensation schemes, for example, because of how people are compensated, financially compensated, or other types of compensations within the financial institutions. That compensation structure determines behaviors. And I think this is an extremely important issue. Supervisors are not yet prepared to look at those. Regulations are not up to date on those issues of incentives, but it's really what's behind most of misbehavior. It's what they get from it, the short-term gains against the long-term objectives of the supervisors. So I think these are the main issues I would highlight.
That's very clear and a great segue into the next session on SupTech, which I'm sure you'll be watching with more than some interest and possibly some good questions for them as well. I'm going to take the liberty, and I've done it a couple of times here, of just saying 4 words that I have written down from this conversation: exclusion, choice, mechanics, and incentives. If we can take at least those away from this session, from your experience and your observation in the context of regulation, in the context of supervision, I think you've helped us think very hard about the pathway forward. And we look forward to continuing this very important journey. Tanwi, Denise, Center for Financial Inclusion, thank you very much. And to all of those who have joined today, we really appreciate your contribution and look forward to finishing the week off strong with a great day of sessions. Thank you very much.